Corporate social responsibility increasingly involves considerable resources, not just in terms of money, but also scarce senior management time. So questions about what is being achieved becomes even more pressing. A business cannot just say it is engaged in CSR. It must prove itself through its actions. Investors require companies to explain to them the returns on investment for corporate social responsibility. It is in this context that monitoring and measurement of CSR becomes very important. While the implementation of CSR is quite well understood as giving effect to and putting into action various activities, the meaning and scope of monitoring of CSR is less clear. This lesson elucidates upon the monitoring and measurement of the CSR strategies followed and activities undertaken in an organization. It follows from the previous slide that after studying this lesson, we would be able to analyze the importance of monitoring and measuring CSR, various techniques and processes of CSR monitoring, as well as preliminary skills in designing CSR measurement index. The measurement of CSR will undoubtedly be useful for the CEOs and all the employees who devote precious time and resources in developing the strategic fit. Despite this, measuring CSR becomes a complex task largely because it is a very wide-ranging concept with innumerable qualitative and quantitative dimensions. The impact of CSR at times is intangible. It is difficult to measure it accurately in either length or width, or in weight or distance. Hence, the impact of CSR to the organization has to be studied in terms of employee loyalty, zero-day or reduced strikes in the production line, increased employee performance, increased productivity, and many other parameters which are an outcome of practicing CSR in the organization and industry. The measurement of CSR is done primarily because it helps in improving accountability. Measurement also helps in avoiding action from pressure group and local communities, avoids reputation and hence business risk. Further, it improves brand image, links social performance with financial performance, and satisfies regulators. To determine if CSR makes a difference to stakeholders, an unbiased assessment has to be undertaken on the categories of internal stakeholders effects, external stakeholder effects, and external institutional effect. To start with, it is important to focus on measuring a few specific things that are relevant to the organization's CSR strategy, such as brand reputation, energy efficiency, employee loyalty, waste reduction, and positive changes in leadership skills among employees. Few more metrics can be added when the organization gains confidence and is convinced that the CSR strategy is functional. That is why a company should only what matters and communicate fewer matrices in multiple ways. After having discussed about measurement, we now come over to monitoring CSR activities. Now the question is, what is monitoring? A useful definition of monitoring is provided by Hallowell as monitoring is a regular or irregular intermittent series of observation in time carried out to show the extent of compliance with a formulated standard target or degree of deviation from expected norm or target. In line with this definition, one needs to define the standards in terms of objectives or targets, and then undertake monitoring to assess whether these objectives are being met. When looking at CSR monitoring and measurements, roughly three types of monitoring methods can be identified. Number 1, internal compliance monitoring and measurement. Number 2, external monitoring and measurement. And number 3, accreditation and certification for verification of measurements. Businesses are reluctant to allow outside agencies for monitoring and measuring CSR activities of their organization. However, some companies are outsourcing monitoring of CSR activities to NGOs and research agencies. These agencies also depend upon the monitoring and measurement instruments developed by international agencies mentioned in the above paragraph and customize the same to the organization's requirements. CSR measurements and monitoring tools can be either quantitative or qualitative. As shown here, quantitative tools include employee and customer surveys, public attitude and trust surveys, employee health and safety, reduction of wastes, efficiency in resource usage, and productivity surveys, SRI rankings, listing and rankings in Dow Jones Sustainability Index, etc. Qualitative tools for measurement and monitoring of CSR are inclusive of positive and negative media coverage, peer and expert evaluation, shareholder dialogue and informal feedback, image among financial analysts and regulators, and perception about company amongst stakeholders.
Let us check our progress now by discussing whether the statements given are right or not. Impact of CSR on an organization has to be studied from the point of view of employee productivity, employee loyalty, and improved performance. Impact of CSR on an organization has to be studied from the point of view of employee productivity, employee loyalty, and improved performance. Measurement of impact of CSR activity should only be done for internal stakeholders. Measurement of impact of CSR activity should only be done for internal stakeholders. Measurement of all CSR initiatives pertaining to all regions must be measured. Measurement of all CSR initiatives pertaining to all regions must be measured. Financial matrix measure inflow and outflow of cash. Financial matrix measure inflow and outflow of cash. External monitoring is monitoring by people outside the company. External monitoring is monitoring by people outside the company. Did we give the right answers? Let us check. Impact of CSR on an organization has to be studied from the point of view of employee productivity, employee loyalty, and improved performance. That is right. Measurement of impact of CSR activity should only be done for internal stakeholders. That's wrong anyways. Measurement of all the CSR initiatives pertaining to all regions must be measured. Again, a wrong statement. Financial matrix measures inflow and outflow of cash. The statement is also wrong. Now the last statement. External monitoring is monitoring by people outside the company. The statement is absolutely right. Let us revise. Private businesses that choose to adopt and implement CSR codes are in the center of system of pressures, incentives, and advocacy that involves many other actors. Companies must give a testimony of commitments by developing appropriate monitoring and measurement tools for developing sustainable business and societies. There are several instruments or voluntary codes which can measure aspects of a company's economic, social, and environmental performance to build its competitive advantage. It depends upon the company which type of monitoring and measurement systems it intends to design for gaining further insights into its CSR strategy. Thank you.